Now I want to quickly explain how prop firm works for you guys and how you can use it to your own advantage. Now let's say you have a $100 in cash, right? If you are to fund your account without $100 and you want to follow a proper risk management, let's say a decent risk management to follow on a $10 account should be 10%. So let's say should be 10%, right? Meaning that 10% should be equal to $10, right? Now let's assume you have a reward ratio of 1:3R. Your reward ratio, your RR is equal to 1:3, meaning if you are risking 1%, you are risking 1% to gain extra 3, right? So now this 10%, one of the risk, this is the 10%, right, of your $100 account. You are risking $10 per trade, right? So this will be $10. This should be $10 times 3, meaning if you are to hit a take profit of 1:3, you are risking 1% to gain 3%. You are risking that $10 to gain. You are risking that $10 to gain $30. You will be up just $30, right? This is all you gained for trading a $100 live account for a 1:3 setup. Now, if you are to use that same $100 to buy a prop, let's just call it a prop, let's just call it PF, right? A prop firm, yeah. You have access to, let's just say this $100 should get you an account of anywhere from above $10,000 to $25,000, but I'd love to use $25,000 on this particular video, right? Now this same $100 give you access to a $25,000 equity on a prop firm. The only thing that belongs to you on this account is 10%. And how much is a 10% of a $25,000? A 10% is, you automatically have access to whopping $2,500. This is the amount you have now, all the way from $100. All you just have to do is pass your phase 1 and phase 2. Then you automatically have access to this $2,500 live account. Now imagine having having access to a live account worth $2,500 all the way from $100. Now if you want to risk 10% on this $2,500, you are automatically have the capacity now you automatically have the capacity to risk $250 per trade. Now same 1:3 RR. Remember, we are still following same 10% on the $100 account, right? Now this is a 10% of a $2,500 account times 3. How much is that? Automatically you gain $750. $750. This is how much you make in profit. Same 1:3%, right? Same 1:3%, but different account size. Imagine, look at what a 1:3 gave you on a $100 account. It gave you $30. It gave you $30. It gave you $30 right here. It gave you $30. But using that same $100 to buy an account of $25,000, you gain $750, a whole $750. Can you imagine how many $30 you will remove from this $750? So that's why I do say your own profitability at times is not as a result of poor risk management or because you don't know how to trade. It is usually because of this capital. Because imagine seeing a profit of $30 in your head. this profit is small, you wouldn't want to close, you still want to hold it. That's why you'll be targeting 1 to 1 billion hour, targeting some unrealistic take profit. Oftentimes the market will come back to hit you out at break even and damage your emotion just until somehow just blow that account. But that same 10% on a $250, look at how much you gain. Like, will you say profit like this and you won't close this profit? Of course not. A whole 750, you will definitely take your money. So your own profitability at times, it doesn't mean you don't know how to trade, and it's not as a result of a poor risk management or whatever. It is just an effect of your account size. It's just the bad side of your account size, basically. In case you want to sign up with the Prof firm I use as at now, the Prof firm I use personally, it is Funding Pips. If you use this code on your screen to get an account for yourself, you have a 20% discount on literally any account you buy. And if you want to buy more accounts over time, you will have access to 5% off. Or not all of us have access to big investors. Not all of us have access to funding, right? So just have to manage whatever we have right now, which is this prop firm, right? If you want to see how I put this thing into work with results and how I was able to get this $200 payout, go and watch this video, good debt versus bad debt. Scroll on my channel. It is somewhere on my, you will see it somewhere on my platform. So if you find this video helpful, drop a W in the comments, smash the like button and follow for more. Also, don't forget to save this video and share it to a friend as well. Help a friend. Peace.